Hello, and welcome to another episode of the Real Estate Investing Club, the place investors go to learn tips, tricks, and stories from other investors in the field. If you feel we provide value to you, go ahead and hit that thumbs up, share whatever it may be. And if you'd like for us to cover a specific topic, let us know in the comments or reach out to us through our website. Today we have a very special guest, so buckle up, grab your pen and paper, and enjoy the ride. Right, we are live. Janis, thank you very much for coming on the show today. How you doing?
I'm great, thanks. Thanks for having me.
Absolutely. To get us started, why don't you tell everybody who you are, where you're from, and how you got started in real estate in the first place?
It's kind of a funny story, but okay. So I'm Janis Benstock, and I'm from Philadelphia, although right now I'm down the shore, the Jersey Shore, like on the MTV show. So, and I do business in both places. So summertime, I do more business down the shore because it's just nicer here. And I started as an agent like way back in the 1900s. And then I opened my brokerage about 6 years ago. And the way I got started was I was zigzagging the 8-year route through college, the lost soul sort of thing. Been there, done it. So my last semester, I was scared I was going to turn 30 and still be an undergrad. So I just needed 8 credits to graduate, and I just picked 2 classes, and it happened to be real estate. And I was like, this is cool. And I sat for my exam, and then here I am all these years later, and I'm still doing it.
I love it. I love it. So you were in college. You didn't know anything about investing, didn't know anything about real estate. You were kind of pressed up against the wall. You're like, crap, I got to get these credits somehow. Chose real estate. Turned out to be a good fit for you. And since then, you've been a broker. Do you own your own brokerage, or are you?
Yeah, I own my own brokerage, and I also invest. But I forgot to tell you this part, right? So when I was sitting in class and realizing this is pretty cool about real estate, the one thing that scared the crap out of me was I didn't understand financing. So when I got out of real estate classes, I also applied for a job as a loan officer. So I did both for the first 5.5 years. And it was like the wild, wild west. It was, underwriting by hand and, like go out for beers with your underwriter and, oh yeah, this is a good file, I'll sign. I mean, it was crazy. But the cool thing was that I totally understand financing now. So even though, the guidelines have changed somewhat, it's all still the same as it was all those years ago. And that's what really parlayed me into investing, because I know how to speak to investors because I understand financing. And so that's why the crux of my business is with investors. And actually, a lot of my agents are investors who just want to invest for themselves and get their license. So they have the MLS. And we also do property management. So we deal with a lot of investors. So it's in my blood.
I love it. I love it. And you're absolutely right. Understanding financing it's like the Bible for investors. You got to know it. It's the only thing that really, it'll push your business further than anything else can, besides being really good at networking. So, you have this great background in the mortgage industry. You've had tons of experience as an investor and a broker. Kind of take us to you were just talking about it just a second ago, the finance side. And what does the process look like on the other side of the table for somebody underwriting a loan? And from an investor's perspective, what is it that will get you a higher appraisal in the end, and then will also underwrite loans better?
So these days, everything, as we all know, is credit driven. It's pretty much all FICO score driven, where back in the day, it was more asset driven. Cash is king. So the lower LTV, the stronger of a borrower you are. But now credit scores have pretty much, because everything's automated and computerized now. So credit scores are key. But then, that's just conventional financing or commercial financing. But there's also hard money, and there's just so many creative ways to do it. But I think that if you just understand the 3 basic pillars of financing are income, assets, and credit, this is where I think people get confused. And the simple lesson I teach on financing is this, and if I bore you, you can tell me to stop. But just to remember that when we're talking about financing, we're looking at 2 things. we're looking at the borrower and we're looking at the collateral. And sometimes people confuse that and they forget to ask the right questions, because the borrower might be qualified. They might have the income, assets, and credit that they need, but the collateral is no good, or the type of loan that they're looking for. So those are the two main things that we have to look at when we're running a scenario past a lender. And oftentimes, no matter how strong the borrower is, if the collateral is no good, you're going to a hard money lender, or you're going to some kind of portfolio lender where you have a relationship. And that's the piece that I see people all the time that are green and they're just starting out. They don't realize that the collateral has something to do with it. They want to go get some sort of conventional financing on a mixed use property or an old warehouse. And I'm like, no, it doesn't work that way. So when you separate it out that way and remember those things, and then as far as the borrower is concerned, it's obviously going to depend on the financing, but you look at those three. I always talk about it like it's a three-legged stool: income, assets, and credit. And if one of those legs is shorter, the other two have to be longer to compensate, or you're going to fall on your ass. So you have to pay attention to all three of those things. Is this G-rated? Am I allowed to say the A word on here?
No, it's totally okay. We're on
okay,
on
good. I didn't know. Cool. All right, I'll be sort of like censored myself though.
It's okay. So income, assets, and credit. Those are the three, as you mentioned it, the three the legs to the stool that is lending, that is getting a loan.
Right.
And if one of those is bad, then you need to kind of compensate in the other areas, or the other two legs of that stool.
Correct.
Perfect. Awesome. So you have a lot of experience in mortgages. I love that. And you're an investor yourself. So kind of tell us, what do you do in investing? Are you single family, multifamily, commercial?
So these days I'm single family. So I always look at it, when I deal with investors or decide if I'm going to invest, there are two basic strategies, and we know them, is renovate and flip, or rent and hold. And rent and hold can also include some renovations or improvements. But it's going to depend on the market, and it's going to depend on where you are in the market, what you're going to do, and what your investment strategy is. And obviously it makes sense to have a mixed bag. And sometimes you're going to do one thing depending on market conditions and then change it up at other times. So years and years ago, I did a few renovate and flips. And then I used that money to purchase my single family homes that now I have a medium-sized rental portfolio. I don't like to finance. I like to pay cash. Oh, wow. Because I just don't like to personally finance. So and being in real estate and doing a few renovate and flips, there's, you make chunks of money. So you can make a lot of money or a medium or small. A lot of agents make small amount of money, but even if you make a lot of money, it usually comes in chunks. It's not like so those chunks, if I take that chunk, it's either, okay, go buy an investment property or take 2 months off and travel around Europe. What am I going to do? And so I sort of forced myself. It's like play chicken with myself. And I just go out and I buy a property and I pay cash, and then I'm done. And it just sits there. So right now, and so what I like to do, and part of being an agent, because I'm a broker, but I still also go out and sell, and I have been for a really long time. Part of being that is that I sort of get eyes on the street and I know where stuff's happening. And so for me, and I'm not a very statistics person, but occasionally I'm visual. So occasionally something crosses my path that's statistics and it really resonates. And a couple of years ago at our Realtor Association annual meeting, we had a economist. He does real estate economy for Drexel University in Philadelphia. And he gave a talk, and most of it was like over my head. It's all numbers and stats. And I'm like, I'm very touchy-feely. Like I just go out and feel what's going on. But he showed us this map, and it was the greatest thing I've ever seen. It was Center City, Philadelphia, and there were red dots that represented where all the building permits were pulled. And so what you saw, if you're familiar with Center City, is in Center City, it was like a big void where there were no no building permits being done, because Center City, the core of it is like the expensive, already a space office, a office building and residential high rise and all that stuff. But as you went out, you could see this red, thick band of where all the building permits were. And then it was almost like a wave that broke, and you could just see like little red sprinkling. And so what I realized was all my investment properties that I buy and all the ones that my clients are buying are just the last red dots, just past where the wave broke. And that's exactly what I intuitively knew from being out on the street. But then when I saw this map, now I show it to investors and I'm like, see this red dot? You go right outside here and you buy because the wave is coming. And it was such a great visual for me that every single year I stalk this guy online and get his map. I like email him like, where's the map? Where's the map? Because I want to show it to people. And that's what we do. We just go outside, right outside the edge, and just wait for the wave to come.
I love it. I love it. And you broke up just a second there, but it was right when you were doing your best line. And for people who didn't hear it, she was saying that she looks at this map that shows all the building permits, and there's a thick red line near the center of the city, and from there it kind of expands outwards. And so she goes right on the outside of all those dots, and she buys real estate, investment properties where the wave is eventually going to reach.
Exactly.
And that's really smart. And I think there's a whole term for that. It's buying in the development path or something like that.
Maybe there's probably a term for it, but that's the thing. Like the whole statistics and definitions, I'm more of a like, I see it, I feel it, and then I just make it. I'm very intuitive, but it's based on science, right? It's based on numbers and data.
Absolutely. Intuition is another, a softer form of science.
Yeah.
That's great. I love it. That's a really good piece of advice. So I want to go into kind of a few of the stories that you've had, the true experiences that you've had so far in real estate. I mean, I'm sure you've bought and sold quite a few properties at this point. Mm-hmm. So kind of take us to, we know that there's real estate. It's a wave, you go up, you go down, it's a roller coaster. So take us to both the trough and the peak. And tell us some of those experiences, the hardest times and the lessons you learned, and then, the best times. And what was the best deal that you've done so far?
The best deal, believe it or not, it was probably the first house I bought to live in, my primary residence. And I swore I've walked into this house. It had been in the same family for 90 years. It didn't even have a toilet. It had but I love old houses. And I just walked in and instantly I was like, I love this house at home. And I thought I was never, ever, ever going to leave. And I restored and had everything done. It was gorgeous. And then I got married and then sold it. And I was like, and then I got divorced. So I was like, right? It's already gone. But I made a fortune on it. I made an absolute fortune on it. And it was great because I paid off my student loans. I bought myself a diamond necklace, and then the rest of it I invested into more property. And that's how I got my bankroll to start doing my renovate and flips. So I did renovate and flips. And the thing is, and I hope the investors out there know this, it's a day's work. It's not get rich quick. It's not winning the lottery. It's a day's work. So, a couple days work, but days work. Did several of those, and I kept doing them. And then I would take the money and put it aside and reinvest some of it. And then 2008 came and I had 3 projects going on, and my contractor partnered with me on one of them. And I had a whole house of cards that was a domino effect, and he got in financial trouble and stopped, and I almost lost my shirt. And it took me several years to crawl back, all the while still working and raising 2 kids newly divorced. Ooh. So with no child support. So I will tell you this, it can kill you. So you have to have a strong stomach. But I wouldn't trade it for anything because I learned a whole lot.
I love it.
About being overexposed.
Overexposure. Okay. So sounds like the lesson you learned was, basically mitigate your risks. Don't leverage yourself too far, because you never know when the hammer will drop in the economy. And we all know the real estate market is cyclical no matter what. Every 10 years, they say it goes up, it goes down. You're going to have fluctuations. So don't leverage yourself beyond what you think is actually, mitigate the risks as you go forward.
And especially look at what's going on now with the pandemic. Who the F would have ever thought we'd have a pandemic and things would be shut down? And in Philadelphia, my market was the last market in North America where real estate was allowed, in-person real estate activities. We were completely shut down until March 19th, I think, completely. And we couldn't do anything. And that's not just real estate licensees. That's investors. That's construction contractors. There was nothing. Appraisals weren't allowed in person. Everything had to be done remotely. And there were people, and there's the mortgage forbearance and all that kind of stuff. So there's, that helped a lot of people. But when you have one project and you have other things depending on that project, it sets off a domino effect. And so it's not just the cyclical. You could study the market and you could know everything that's going to happen based on economics and indicators and all that. And then a freaking pandemic hits. So definitely do not over leverage yourself. I'm telling you right now, I almost lost my shirt.
I love it. Yeah, that is, it's pertinent advice for anybody out there, whether you're you have a 12 million AUM or you got 2 rental units. Never over leverage. Only bad things can come from that.
Yep.
Great. So it sounds like, you've been through the ups, you've been through the downs, you've learned a lot, but you're back on top. So what brings you back to real estate? What do you love so much about it?
It's kind of what I've always been doing it. I get it. And, what I love about real estate, and remember, so I do a bunch of things. I call myself a real estate nerd because I'm a broker. I still transact, with buyers and sellers. I'm an investor. And I also teach the real estate courses. And I also teach agents how to build. So I'm kind of like a workaholic to the nth degree. And I think what I love about real estate most, I find houses interesting, which is, I think, what first got me. But I think that the real estate law and the financing is really fascinating. And the fact that there are so many different ways that you can invent yourself and reinvent yourself in this industry and make a living with freedom and flexibility and the ability to always expand your mind. My business has shifted and changed and grown so much over the past, it's 24 years, the past 24 years that I've been doing this. And I never get bored. I never get bored. And if I were an investor full time, my business would probably change also, because I'm guessing that most of the investors out there, their investment strategy changes and ebbs and flows with the market and with their life, right? You have little kids at home. Maybe you're doing rent and holds. Your kids are older, or you don't have kids. You're able to go out and do renovate and flips because it's so much more time consuming. Or you want to buy a vacation home, so you're tying up your cash and now you can't put money into construction. The cool thing about it is that it dances with your life. And you can make it whatever you want it to be. And if you get bored, you can go be a home inspector or an appraiser or a real estate agent. There's always somewhere to branch out, or a loan officer, right? I never get bored with it.
Yeah, I like that phrase you just used. Yeah, real estate dances with your life. That's I think I might take that one from you.
You can borrow. Just put my name down there in quotes.
There you go.
Yeah, give me credit. You can borrow it. You can use it.
Absolutely. So Janis, we are nearing the end of our time here. We like to keep these around 20 minutes. So before we leave, though, I always like to leave off with guests giving their absolute best piece of advice for real estate investors out there. So if you could go back to the Janis who started pre-crash, pre-everything, she was just getting out, in that class back in college when you just learned about real estate and real estate as an industry. If you could go back to her and give her one piece of advice going forward, what would that piece of advice be?
As a real estate investor, one piece of advice that I would give myself is start sooner. I would definitely start sooner because people are scared of it. And even, here's the thing, the sooner you start, and this is with any kind of investing, this is, with any way of, like Rich Dad, Poor Dad, the Bible, right? Have your money work for you. Put it into an income producing asset. The sooner you can do that and stop spending your money and, using it as a liability, the sooner you can be free. And even if you totally F up like I did when you made a mistake, here's the thing. Once you have that mindset that wealth mindset, you're going to come right back up within minutes because you have that mindset. If you're working linear your whole life, you don't have that mindset, you're probably never going to fail, but you're also never going to exceed. And you start, the better. Even if you fall down, pick yourself up, brush yourself off, and start again. And here's the thing. You can follow. I talked to a friend of mine. I was having financial worries a couple of months ago when COVID hit, and I called him up. He's really successful, and I was like, "Oh my God, I made this kind of money." I was like freaking out. He's like, "Shut up." I'm like, "What?" He goes, "Do you know how to make money?" And I said, "Yeah." He said, "Can anyone ever take that away from you?" And I said, "No." He said, "Get off the phone and go figure it out." And I did.
I like it. That's a mentor that you want to keep in your life for sure.
Absolutely.
Awesome. Well, Janis, again, thank you very much for coming on. I'm sure I can speak for everyone listening and watching. We appreciate the wisdom you shared. If anybody did want to get in contact with you, what would be the best way for them to do that?
You could just contact me on my website, Janis. Contact me on my brokerage website, settledownphiladelphia.com. And you can reach out to me there. We work in Philadelphia and New Jersey, but we can help you with investment strategies all over the place. Or you can come and invest in Philly. We have some really good cap rates on rental stuff. Our housing prices are really low and our rents are really high. An investor's wet dream. So yeah, sorry. I did it again. But it is. Our cap rates are thick.
I might have to take you up on that. We're looking for multifamily outside of Washington. So perfect. Well, again, thank you very much for being here, for coming on the show. If anybody wants to get in contact with Janis, reach out to her on our website. I forgot. It was
Settle Down Philadelphia.
SettleDownPhiladelphia.com. I will also put her LinkedIn profile in the show notes, so you can reach out to her there. And other than that, thank you for coming on. And for everybody else, we look forward to seeing you guys on the next episode.
Awesome. Thank you so much.
Thank you for joining us on the Real Estate Investing Club. If you feel we provided value, we would appreciate it if you hit that thumbs up, share with your friends online, whatever it may be. If you'd like to share or partner with us on an investment deal, we are always looking for quality projects. Go to www.therealestateinvestingclub.com to get in contact with one of our partners. Otherwise, I hope you guys have an absolutely fantastic day, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.